Okay, we were looking at that 4-hour chart just before the recess, and we now have a complete segregation of the first leg down into wave C. That wave C that we're looking here at, this wave C and 4C, is going to be a 5 swing of this leg of what we're showing here. So that's not really our bother now. We need to segregate the internals very well so that any correction we can get into the right level. Into that correction, everyone now knows that the trend is down, is bearish, so we just want to segregate the correct entry. So over here we're showing a 1, 2 in red, there is a 3, there is a 4. Of course that 4 had done an A and a B and a C. This is the end of that 4. The current market is going down in wave 5, and that wave 5 starts right at the top of that wave 4 here, all the way down, is still actually extending. So it did an internal 1 in yellow and an internal 2 in yellow. It did an internal 3. Market is now doing an internal 4C. Okay, the best entry is going to be any 4C will should never, if we are correct, rise above the bottom of level 1, especially on such very strong negative momentum, trending momentum on the 1 hour and the 4 hours. Sorry, on the 4 hours on the day, not on the 1 hour. Doesn't have to be on the 1 hour. Alright, so the best entry is going to be just below level 1, 4,485. Usually we will not get this kind of entry, 44,859. We will not get it, so we need to project the exact internal projection of 4C into an A, B and a C, so that we can select the market top of this correction, sell into it. At that point, it is going to be doing a 5 structure down, a 1, 2, a 3, and a 4, and a 5. Usually we sell at that top of 4C, take profit at the neckline, $40,000 and $39,000, and then we clear the position. Alright, so we move straight now to trading. We just want to relate the pivot levels where we expect to make an entry. Again, level management is really much more important than entry management, because if we have these pivot tables and we know that we should be selling 44,000, okay, so we may think we're not going to be getting 44,500, the one that is shown here. All right, we simply know that anything that we sell below 44,000, if you're selling 42,200, if you're selling 43,000, with a stop at $47,500 per 1/10 of a coin, should see you by the end of the month at 32,000, or should see you by the end of the week at 36,500. All right, so actually the stop is at that yellow arrow, 47,500 at the top of level 2C. This is here 47,200 and 0300, the breakout high for the week. All right, we're best filled, of course, if you are able to sell the fluctuation high, 44,950, 50% below the fluctuation high is 43,780. These levels are showing here 44,900, 61.8%. Of course, 43,700 is just 780, just below that. I think 43,780 is going to be seen in the current 4C that we see. So we have to focus very much on this. Towards the end of the week, if we're fortunate, we are able to get 36,485 is just, this is that neckline here, has already been tested in wave B. It is just probably 127.2% below the current market low. All right, let's go now to trade management. This is the 1 hour chart that we're looking at, the current today's 1 hour chart. The market is doing again a degree 4 correction. It did an A and a B and a C. Now 2 trades to take. The first is going to be an intra-week trade. Intra-week trade, of course, would mean again we're selling all the way up to 44,950. Anything below that, 44,950, 43,780, the fluctuation highs here, should be sold to the market low, 38,830, simply by leaving limit entries. We do nothing else. Don't think even about, we expect. We're very fortunate if we get filled at these levels with a stop at 47,000. It's just $300 higher per 1/10 of a coin.